Hello, this is Seewing and today is, as the date of this recording, is Thursday, the 4th of May. As you may not know, the Federal Reserve had just raised their rates yesterday. So many of you are thinking, is that going to affect the mortgage interest rate? So with that in mind, let me share this with you first. All right. According to the Mortgage News Daily today, which is the 4th of May, the mortgage rate has came down zero point zero 0.09 basis point to 6.49% for the 30-year fixed rate for those people who has good credit. And furthermore, the 30-year fixed rate, VA low rate, which applies to military veterans, 0% down payment like myself. I've done many of the VA loans over the years. And it was FHA, Federal Housing Administration loan, 3.5% down payment. Primary home buyers, their rates have decreased to 6.08%, which is very good, very favorable. And the jumbo rates has also decreased 0.05% to 6.15%. Jumbo rates, people for obtaining larger non-conforming mortgages in the some hundred thousands and higher, depending on the location where you live in the country. The one thing I noticed is that the adjustable rate mortgage, the 5-1 adjustable rate mortgage, historically, the spread between the 30-year fixed rate and the ARM rate have a larger spread. But in this case, this is very unique. I have not seen this for a very long time. The 5-1 ARM rate is 6.72%, which is only 0.3 something basis point higher than the 30-year fixed rate mortgage. So at the end of the day, so really, in my opinion, some people are thinking, oh, they should go for ARM rate, 5-1 ARM rate, whatever, adjustable rate. But given today's mortgage environment, does not make sense for someone to pay their attention, to focus on the ARM rate. Go with the 30-year fixed rate because the spread is so low. Does that make sense? Yeah. Anyway, things are not looking good even with the rate hike. See, the thing is, the mortgage rate does not coincide with the Federal Reserve rate hike. So a lot of people are very confused by it. Anyway, I'm going to share with you a couple more things here. As you can see, in the past 3 weeks, there has been some decreases in the mortgage rate, which is very favorable, very good. What I want to share with you is this article here, the lowest mortgage rates in weeks after the rate hikes. Here's how that works, okay? Let me share with you. Sometimes there are some disconnect. And this article right here by Matthew Graham on the Mortgage News Daily website, he says right here, let's focus on why today's Fed rate hike coexists with mortgage rates moving lower. Right? It's an inverse relationship. So it says right here, the Fed hike the Fed funds rate. That applies to loans between large institutions for a period of less than a day. By influencing the cost of the shorter-term capital at the highest levels, the Fed is attempting to cool demand for goods and services, thereby reducing inflation. When the inflation are reduced, then the mortgage interest rate just patterns after the 10-year treasury, which I will discuss momentarily. That's why we have seen mortgage rate reduction, which is counter to what the rate hike just occurred this time. So the most obvious reason that a Fed rate hike can coexist with lower mortgage rates is that the bond market already knew the Fed was going to hike and had long since priced that into the present level of rates. It would be different if the Fed could hike rates anytime, any day, but there are only 8 meetings per year that result in rate changes. That means the market has a lot of time to adjust expectations in between those meetings. And here's the bottom line. Here's the bottom line. The average mortgage lender is down to the lowest level in roughly 3 weeks. So today, 6.49%, I suspect triggers more interest from the home buyers. I expect the Mortgage Bankers Association going to receive more loan applications in the next few days, this week, and the information will be reflected when I update you on those headlines in a few weeks, in a month, because everything is a lagging indicator. Here's the biggest takeaway from this article: why the disconnect between the federal rate hike and the mortgage rates coming down. So this is kind of an opposite reaction. And the biggest takeaway for myself and you guys, what you need to know is, and here it is, here's the sentence that you need to take away with on this article. Additional gains will depend on the economic data in the coming days, particularly this Friday, which is tomorrow, this Friday's job report and next week's consumer price index, the CPI report. So again, the Fed is trying to fight inflation. If they could reduce inflation down to 2%, that is their objective, and mortgage rate will hopefully decrease accordingly. But hopefully that's going to happen toward the end of this year and the beginning of next year, 2024. Is that we have received a lot of positive signals. The mortgage rates steadily could go down the next 12 months, and that will create a lot of housing activity, a lot more demand than it is right now. So the takeaway, once again, is that the Federal Reserve may not do another rate hike for a while. And so some of you are thinking, oh, if that's the case, then the interest rate should remain very stable. What about the mortgage rate? Again, just because the Federal Reserve are not intend to have any more meetings for the foreseeable future in respect to the rate hike, it does not mean the mortgage rates will continue to decrease like we have seen in the past 2 weeks. Another article I want to share that with you. This article came out yesterday, the May the 3rd. The headline with the Housing Wire is that mortgage demand falls despite a decline in rates. Okay, why? Why is mortgage demand fell even though the mortgage rates have decreased in the past 3 weeks? And here are some partial answer. Mortgage applications fell last week by 1.2% on a seasonally adjusted basis compared to 1 week earlier, according to the MBA, Mortgage Bankers Association weekly mortgage applications survey. According to the survey, the index has decreased 2% from 1 week earlier. The refinance index, on the other hand, increased 1% the previous week, but was down by a whopping 51% from the same week a year ago. Bear in mind, I just want to pinpoint this a very important thing with you. Same time last year, the mortgage rate was around a little bit higher than 5%. So the housing activity is still very robust on May. In case you may not be aware, the skyrocketing mortgage rate occurred during the summer of last year, 2022, around June, July timeframe. Just keep that in mind. All right, let's go back to here, this article here with the Housing Wire. All right. And furthermore, the FHA loans share of total applications decreased to 12.5% last week from 12.6% from the week prior. The VA, military veterans, 0% down payment, that category of people, including myself, ex-veteran. The VA applications, however, rose 11.3% from 11.2% 1 week ago. The MBA survey shows the average interest rate for 30-year rate mortgage. I already told you the interest rate as of today. And the jumbo now, here's something a little bit concerning. The jumbo conforming spread continuing to narrow an indication that there is reduced lender appetite for jumbo loans following the recent turmoil in the banking sector and heightened concern about liquidity. Following JP Morgan Chase Bank's acquisition of First Federal Bank, which is the second worst banking crisis other than the Silicon Valley Bank occurred prior, there were expectations that the existing hole in the jumbo lending will widen, says Jamie Dimon, the CEO of JP Morgan, indicated in a call this past Monday. Making very large, cheap mortgage loans will not happen going forward, he said, knowing that Chase won't be following First Republic jumbo lending model. Despite the First Republic bank failure, which resulted in the second largest bank failure in U.S. history, the Federal Reserve is still expected to raise rates by 2.25 basis point on Wednesday, which was yesterday. So I really went over that. So the reason that the Fed rate did not affect the mortgage rate, as a matter of fact, the mortgage rate came down, as I stated a moment ago. So here's my takeaway with the jumbo loan situation. We already know the western region of the U.S. where there were some housing price reductions, volatility. The typical New York, Northeast New York State, to get the California markets, Boise, Idaho, Nevada, Austin, Texas, and Phoenix, Arizona. These regions have gone through some more of a housing correction than other areas of the country. So therefore, there's some price reductions, housing prices decreases in the past 10 months. We all know that has been widely reported by many news media sources. And the jumbo loans, so a lot of the home price reduction are not across the board, are not at every price level. So you have luxury homes, 700,000 to $1 million or more, especially in California markets, has gone down 10 to 50%, depending on what area in California and the western region. And the lack of viable jumbo loan products that support these higher end purchases are impacting the higher end luxury home market. That's why I think the data that are coming from various sources, or Redfin or NAR or Zillow, whatever, they will report housing price decreases year over year, but a lot of it come from the upper end homes. We have seen more decreases of home prices on upper level luxury homes that kind of skew the data across the board. Some, what myself or other YouTubers report this year over year housing price reductions in certain markets. You have to take it with a grain of salt. Some type of data and the higher end, larger price reductions, which can skew the number of the lower end entry levels, medium price homes in many of those markets that are still are doing fairly well. They have been stabilizing. As a matter of fact, you may not know, this past couple of months, there has been increases in home prices across the board all over the U.S. due to very low inventory and pent up demand. And a lot of those, we have seen bidding wars and multiple offers, right? Not crazy compared to 2021, but we have seen bidding wars, multiple offers, 5-10 offers, 5-10% per house, 5-10% increase in bidding prices. But those are entry level, lower than medium price homes. They are going robust, especially when those homes are priced very well according to the realistic market conditions. And as well as those homes are rehab, fixed up, or turnkey situation, or in the good locations, those entry level homes across the board, all over the U.S. have achieved tremendous uptake activity so far. Things are moving positively, but still a long way to go. That's all I have to say on these videos. I have more videos to cover about other aspects of the housing market, very timely, urgent, important information that will help you guys out there in the YouTube world to educate yourself accordingly and be more informed. So, before I leave you with this video, you see value on this presentation, please smash the like button and subscribe to my YouTube channel if you have not. I need to impact more people. I need more subscribers. Please do so and refer your friends and people you know to my channel, because not only I cover general housing market conditions on a weekly basis, but also cover real estate investing information. You can quickly visit my website below and drop your email into the form to subscribe to my weekly turnkey real estate investor newsletter. And once you join our network, you will receive weekly market updates, investment opportunities, real estate education, and interview with top industry leaders straight to your inbox that you just won't find anywhere else. All right. Thank you so much for watching. And this is Seewing Yi, and I will see you on the next video very shortly. Have a nice day. Bye bye.